Hey, what's good, everybody? Happy Monday. How's it going? Welcome, welcome. This is the Closing Beat, just a quick stock market update show that we do every day to cover the good, the bad, and the ugly. We've got so many cool things going on. If you could only see what was behind this camera, I'm so pumped to share that with you guys, but still probably a week or two to go before it's all complete. We're building a jazz club. It's like you'll see, it's what it is. Anyways, I hope you'll keep us in mind at Jazz Wealth here. We're financial advisors. We're just doing things differently, right? We want to bring the same financial advice that you get from the big stuffy companies down to the beginners, right? The people that have, they're not considered high net worth. You got like, 10,000, 1,000, 100,000. You don't even get to go into like the JP Morgans and things and get all that help. Well, we want to bring that to you guys. We also have a little fun every now and then and play a game. We're playing it now. It's called Guess the Dow. You can go to the website and guess where you think the Dow will close next week. Closest without going over, we'll send you a $100 gift card like Mr. Juan Segura last week was our winner. $100 gift card on the way out to him. And by the way, there's only 118 guesses. That's the least amount of guesses by far that we've ever had. So if that continues this week, your odds are better. Also, if you're one of our customers, we just credit your account. Totally okay if you want to do that. Also, we do a video every day at 1 o'clock, or we post it at 1 o'clock. Today might have been a little stats heavy. I'm just curious what you guys think. Like, leave a comment. If you hate it, that's fine. But, just went a little geeky on the video today. Just trying to kind of show and share some of the data that we do offer to customers just to keep them in the loop, growing their dough as efficiently as possible. I love it, man. I love it. Let's talk about the stock market. We got the Dow lower by 96 today. The S&P lost 13, and the NASDAQ lost 26 on the day. Although earnings season really starts next week, right? This week, yeah, there's earnings. There has been last week, but sort of the start of earnings season really is next week. So you go, all right, well, I'll come back then. You don't want to miss this week, man. This week is going to be busy and it's going to be trade focused. Not a ton of economic news coming out, but we got the trade talks starting again today with sort of the rookie negotiators, and then starting on Thursday is when high level talks start back up again. So definitely not something you want to miss. We started off today already with Bloomberg saying that China says we don't want a trade deal. So the market started a little bit lower, and then you had Larry Kudlow, the economic advisor for the president. He came out and said, hey, that thing about delisting Chinese companies, that's not on the table. Those were his quote words, not on the table. And so you got the stock market like trying to recover a little bit, starting to digest this news, right? Like a lot of people are like, okay, do I buy? Wait, should I wait? Okay, hold on, should I buy again? And so you're going to have a lot of that. This is just going to be a week where we see that sort of thing there. The drama. All right, investors, while they're waiting for the drama, they tend to focus on technicals and fundamentals. Fundamentals really start next week with earnings, but from a technical perspective, let's look at the S&P 500 real quick. This is the big focus right now. We trended higher, recovered all of December throughout the first part of this year, pulled back. Everybody was cool with that. Just a nice little pullback. We then rallied, recovered it. There's a healthy, just trending higher type market, pullbacks and rallies. But then we made this high, pulled back rather aggressively, and lots of tweets and great stuff going on there. And now we've sort of petered out, for lack of a better word. And what everybody's focused on is, hey, we didn't make a new high, right? An uptrend, if you're a technical trader, an uptrend is defined as a series of higher highs and higher lows, right? And so what that means is we got a higher high here for the year, we pull back, we have a new higher high, meaning it trades over the previous high, and the next pullback is higher than the previous low. So hence you have higher highs and higher lows. That's what defines an uptrend. Well, anyways, we got this new run here. We did not make a new high. We made a higher low so far, but we did not make a new high. So everybody's kind of saying, wait a minute, that could be a warning sign right there, among other things. And so when you have investors, traders, long-term investors that can't focus on anything else, they look to the charts. And right now you got a lot of people looking to the charts. They're going, no, I see a top in the market, right? Well, we need to distract them from that. If you're a bull, we need to get them looking at trade, hopefully good things going on there. And we'll see, we'll keep it posted. But anyway, so that's the S&P 500. Today was pretty quiet, back below the 50-day moving average. Not really a lot going on there, playing back and forth. If I look at a couple of the other areas, we'll look at the NASDAQ. Still kind of flirting with the known resistance area. Talked about this on Friday, said I'd leave this line here for you guys just so you know I'm not making stuff up. This area right here is a known resistance area, even though it's not very obvious. And so you can see today the NASDAQ ran right into it. Everybody noticed the same thing and said, I'm done buying. I'm not gonna fight this area here. So I'll continue to leave that chart there. Anything above that on a closing basis is actually good news for the NASDAQ. You'd expect it to move back towards highs there. So we can cover that more if you like. We'll see. So anyways, the Dow also moving back below the 50-day moving average. A lot of talk on the Russell today. We have what's known as a death cross. It doesn't sound very good, does it? A death cross is not normally known for being very good. That just simply means when the blue line goes below the red line. That's known as a death cross. Back below over here, you can see the last time the blue line went below the red line, the markets sold off. And I'm oversimplifying this just to keep it simple for people that don't know what this is. Basically, it means anytime the 50-day simple moving average trades below the 200-day simple moving average as well. Tends to be a little bit negative for stocks. I'm going to work up something for you guys. We'll see what we can come up with there, because I've never done it on the Russell 2000. We've done it on sectors in the past where we talked about healthcare. We did the financials death cross there. Well, golden cross, which was the financials. That's the opposite. So anyways, maybe we'll come up with something there if there's not much to talk about this week. But a lot of focus on that today with the Russell. There was some econ news that came out today. Consumer credit. You guys are killing it. You're killing it, by the way. Check it out. Let me see if I can share this with you. Consumer credit actually was lower than expected, still higher overall, so don't let me mislead you here. Consumer credit still expanded. It just didn't expand as much as everybody thought. For the month of last month, we had $17.9 billion in outstanding consumer credit. Here's the cool part about it, and this is going to get a little geeky for you, but I'm feeling geeky this week. We've got non-revolving consumer credit, mortgages, car loans, things like that. Actually saw an uptick. So the entire expansion of consumer credit this last month came from fixed loans. I think that's cool. That's people that are saying, look, if I have to spend my money, I'm going to spend it on a car, right, at 3% interest or 2% interest or even 0% interest depending on your credit, right? So people said, I'm going to spend my money on a car. I'm going to go spend some money on a house, maybe a second house or whatever they did. So big expansion in non-revolving. If we take the purple line and we essentially break it into revolving versus non-revolving, that's what I'm doing here. So all the expansion came there. Here's why I'm saying you guys are killing it. If we look at revolving consumer credit, I'll put that on a chart. It's going to be your light blue line, down by almost $2 billion. So that's one of the biggest reasons why consumer credit did not expand as expected in July, last month. I'm sorry, in July, not last month, in the month of July. One of the reasons it did not expand, people are paying off their credit cards. They're not taking on new credit card debt. They're willing to go put their extra dough towards that. I love it. I love it. If you zoom out, though, you can kind of see, well, basically we flattened out with overall credit card debt here for the year of 2018 and 2019. That's awesome, right? Very, very, very cool there. So I thought I'd point that out to you guys. Y'all are nailing it. Keep up the good work. That's good to see. All right, enough of that stuff. Let's go back to the charts here. So last week, if you look at the markets last week, your biggest gainer, meaning your biggest mover from low to high on the week, was healthcare. We can officially get rid of all this garbage. That's a broken pattern. That's a broken pattern. We'll come back to that. So from lows to highs there, your biggest mover, meaning the sector that wiggled around the most, was healthcare, followed by technology. So XLK, I'll use to point that out if you want to see. That's basically just breaking below here and sweeping right back up last week, so one of the bigger movers there. To the downside there, we talked about this a few times. You had basic materials, big breakdown there in basic materials, wasn't able to really recover there. Energy and industrials were second, believe it or not. Energy was still second there in terms of your big movers. And industrials, very, very close third. So if you're wondering, like, what areas of the market were really kind of punched last week versus doing well, I always like to point that out. Usually I point it out on Mondays for you. All right, if we take a look here today, all but the communications services sector was negative on the day. So you had 10 out of the 11 sectors negative on the day, although it was just sort of small ranges, right? There really wasn't a whole lot. So check it out. You got XLC higher today, just by a little bit. And some of the decliners today, small decliners, not really anything to get any new information on. So you got communication services down less than 1%. Even the oil and gas exploration down 1.2%, which it sounds like more than what I just said, but it's really not that much compared to how this thing's been moving. So this even slowed down a little bit there as well. If we look at some of the bigger sectors, financials only down 0.5%, so not a whole lot we can gauge from that. You had semiconductors down just a little bit, about 0.5% on the day. Not much we can gauge from that. So kind of cool there, right? That's basically all I have to say sector-wise. So I'm going to dive into some stocks now because it was just awfully quiet there across the board in terms of overall sectors. So let's go into some stocks. I'll take your questions from there. We got Uber added 2.3% on the day. Citi upgraded the stock. They kept the price target though. So Citi, by the way, Citi is at $45 all the way up here. That's their price target. They had the chance to lower it. They said, no, 45 will do the trick. They're optimistic on a shift in overall sentiment and hoping that they're essentially trying to say they think this is close to the bottom. That was what they were trying to say. The analyst that gave this target, he's a 62% accurate analyst with a 12% average gain on his picks there. Average price target within the last month, actually, for everybody that's either upgraded or downgraded the stock, average price target is 52.23. That's off the charts there. That's 70% higher than where we're at. So a lot of analysts coming around saying, all right, enough's enough. Uber's worth more than this. They're going to figure it out. They're doing what they need to do to make this an interesting company. That's what they said, not me. ConocoPhillips up 2% on the day. They raised the dividend by 38%. You don't often get to see something like that. You dividend players out there, how's that make you feel? Now you want to buy the stock? The stock's been trading lower here. It's at a discount at the moment, 38% increase in the dividend. You feeling that? They're also going to buy back $3 billion in shares, so that's going to affect their earnings coming up. I don't know when that starts, though, by the way, so just so you know. That's coming up. Moody's higher by 2.25% on the day. A lot of companies upgraded this one. UBS, Morgan Stanley upgraded the stock, a couple others. Average price target's now 222.67, which is up here. Basically just gives you about 10% upside. Most of the analysts thinking that. In the short term, though, this had a good run. Right? When stocks move a little too far, too fast to the downside, they tend to snap back. When they snap back, or stocks that move too quick to the upside, they tend to snap back. There's not much difference there. So you expect this to be just a little bit back and forth there in the short term. I'd be in no hurry if the Moody's news today got you excited. All right, JetBlue a little bit higher on the day, 1.5%. They were upgraded today. I forget the name of the, I got to track this stuff. They were upgraded today. Was it Wellington? Wedbush? I can't remember who it was. I got the stats for you here. Anyways, that analyst said they were focused on improvements to their IT, which means some of the software that they're using to drive higher revenues and play those games where we don't know if we're buying the ticket lower or higher or whatever. They think that's going to drive higher revenues there. The analyst is at $22 for a price target. That puts it, that's optimistic. That puts it way, way up here. He's 56% accurate with an 8% average gain for the calls that he's had there. The best analyst has 1970 as their target. They're essentially saying it's worth these highs. In the next 12 months, it will move back to the 1970 area there. So that's about 19% to the upside there. No, I'm sorry, that 19%. He's at $19. So $19, I got my numbers wrong there. He's 70% accurate, 19% average gain there. Basically, analysts are right around $20.25. So everybody's pretty bullish on JetBlue if you like to take a look at that one. Not sure what you think about that. Dollar Tree reversing lower today, down 3%. Found out that one of the chairman, Bob Sasser, sold 70,000 shares. Always hits stocks there in the short term when people find that sort of thing out. It's also public record. It's not like it's a surprise or anything. Ulta also pulling back. Remember, here's a great example. We talked about this last week. Stocks go a little too far too fast. Don't rush your way into them. There's no need to be hurrying into the stock. Ask for it to pull back and take a break. It is currently pulling back. Now you ask for it to take a break to show you the selling is over. Match.com moving a little bit higher on the day. Actually, about 5% on the day. It was upgraded by Nomura and Deutsche Bank. $88 and $93 price targets respectively, basically putting it back towards those prior highs. So I don't know what you think about Match.com, but it's been, it's been weaker here. This sort of sell-off, what was that, September? Little sell-off that started there and has been trying to recover. That's from that Facebook. Remember, Facebook was saying they were going to do this sort of opt-in dating service on Facebook, which would just kill the other dating services, because what do we all use every day? Facebook, right? So that's that one. All right, what else do we have? 46% of the S&P is above the 50-day moving average. It was 49% on Friday, so only a small change there. There were 8 new highs today. Apple and 5 REITs. That's basically all it was. Apple. Almost, it hit those new highs. Didn't close up there. It is close to taking over Microsoft there in terms of the largest valued company out there. only within, what was it, 40 million dollars there. So getting close. Apple closed basically down near its lows on the day, though. Wasn't able to get anything done. So that's that one. What else do we have here for you? Did you did you see this one? We've been giving you the stats on AMD. Look what happened today. AMD hits the line, right? That's where it needed to be. So we drew the line there. We said it would be up 2.09%. In the next 5 days, it actually did it in 5 days. Today is the 5th day. So isn't that funny how it stopped right there as well? I didn't just put that line on there. I put that on there the very first day we started talking about this stat. So kind of cool how those stats work out, right? We have the other one brewing at the moment, Lennar. I drew the line on the chart there. It's down about a quarter point today. It's supposed to lose about 1% in the next 5 days. Today is day number 1 for that one. So we'll see. It's 1/4 of the way there. That's easy math. Huh? Don't you like that? Day 1, we'll see what happens. 66.6% of the time, it falls 1% in the next 5 days based on it being extended there in the short term. A couple others for you, and we'll take your questions. I know I said that already. Kroger up just a little bit today. They're going to discontinue the e-cigarettes at their stores. Charles Schwab was on CNBC. I only caught the tail end of it, but basically he was talking about the commission-free stuff, saying, hey, you can pay us in other ways. It's all good. We're going to make our money. He was not concerned. And then he said, what I thought was interesting was he said he would not buy into these garbage IPOs that are coming out, companies that are losing money. I mean, how many times do I point that out? New IPO comes out, everybody asks me the question, I go, yeah, but they lose money. They lose money. That's crazy. It's a tough one. So anyways, I like, I'm on Charles Schwab's side there. We'll see. What else? Goldman Sachs got a letter out to their high net worth investors saying the economy is not slowing. There is no sign of a recession coming. They were basically saying, don't worry about it. No recession, that growth is slowing, but overall the economy and the stock market will be just fine. They also predicted 3,100 on the S&P by the end of the year. If we look at that, that's not a whole lot higher, by the way, but if we take a look at the S&P 500, the actual futures here trading at 29.35, we should probably use the SPX. If someone's going to give me grief on that one. Okay, SPX 29.38, they're basically saying just above new highs there, 3,100, sorry, 3,100. That puts you all the way up here by the end of the year. So they've got, that's what they're telling their customers anyways. What do you think about that? How do you feel about that one? Anyways, that's what we have going on there. What do we have? A couple articles in Barron's. Barron's said Delta is attractive at these prices. Interesting. So Delta, attractive valuation. They like the stock there. Barron's also says Schwab will win the race to giving everything away for free. And they also were pretty negative on Spotify. Well, I don't look at Spotify often. Spotify trading near lows. Interesting. So they're pretty negative on Spotify, saying they're not really sure how they're supposed to make a profit. So they can't figure out how the company's going to make a profit if Barron's can't figure it out. And the analysts also agree, by the way. That's a tough one there. Earnings tomorrow, we got Domino's Pizza and Levi's. Levi's recently coming back public, so that'll be one that's in the headlines. You got 2 Fed members speaking tomorrow as well. Remember, they're out in droves. The Fed members are out there. They want you to know. They're going to keep saying it's called jawboning. They're going to keep all this great talk like, don't worry, we got you covered. So more of them coming out as well. And we'll basically see how things go from there. All right, I'll take your questions if you have any, and we'll go just step by step till we figure it out here. What do you think about the commission free on brokers? Covered that last week. Sort of disappointing to me. I think they'll get their money. They'll probably start charging subscriptions for their platforms and stuff, because I hope they do, to be honest with you. They have to charge for these platforms. The platforms are incredible, at least at like the TD Ameritrade, things like that. I want that to continue as someone who likes using that stuff. I don't want it for free. I want to pay for it, and then I want to ask for upgrades and improvements, and I want to get them. So that's where I stand on that one. But anyways, when does Apple report? Will the stock move up or down? Will a stock move up or down? Whew, okay. Let's see. So Apple reports October 30th, I believe. Whoops. Yeah, October 30th. they will they report their earnings. So we've got a ways to go. As we get into earnings season, we'll start doing the things where we did before, like where we talk about stats and things based on the earnings. But to give you guys an idea of sort of the things that I like to look up, Apple's got earnings coming up. They beat 89% of the time on earnings. They figured that game out. It is positive on the first day of earnings only 60% of the time. It is a volatile one, by the way. Average price move 5.14%. On the day of the next day following earnings, because they report after the close. So it's a volatile one. Old Mark's been selling some Facebook stock there as well. Yeah, I mean, now there's planned selling. You can look all that up, basically. It's nothing like crazy. Yeah, Mark Zuckerberg selling shares. What do we have here? Well, basically every couple days. Mark Zuckerberg selling shares basically every couple days. He's got some going out there. Normally, you do see there's consistent selling, just part of their normal process there. It's all pre-filled out. I could do a video on that, actually. What else do we have there? He is selling a lot of stock. I'll give you that. I did not expect to see that much. If you invest a small fixed amount per week, it makes sense to buy mutual funds little by little, as it does not cost me, at least at Vanguard. Can the same be said we're investing in individual stocks? Well, now, I mean, technically, now you can do it with individual stocks, ETFs. I would argue that now by doing it that way with these commission-free companies, you're actually doing better than a mutual fund because you're eliminating the costs. It's sort of like what we do here. All of our portfolios, we just build portfolios made up of stocks or ETFs. And so that way there's no expense ratio, right? It doesn't cost you anything. Whereas if you buy a mutual fund, you want to look into the real costs and everything. So it sort of opens the door for you to build your own portfolios. I might even start touching on videos there where we build mock portfolios, and then I sort of go through and show you like what would I do if I was managing it, how would I take out some of the risk and things. I don't know if that's all that interesting to you guys, but that's something I thought about doing video-wise just because I'm going to do it anyways, here, not on YouTube. Is it possible to transfer stocks from a taxable brokerage account to your SEP IRA? You need to sell the stock and repurchase it. If you are doing it from a taxable to the SEP IRA and you have a gain on it, the IRS is going to want their money. Yeah. Now you can do it from IRA to IRA. You can just pick up a stock position and move it without selling it, but in a taxable account. In most, I believe in every case, I'm not sure of any scenario where the IRS isn't going to want their money. Now, could you take the stock and just put it in the IRA? I believe some places will let you do that. I know we would allow you to do that. However, you have to report the tax. I mean, it's essentially a sale anyways, so it makes it more of a headache to do it that way, by the way, for you on your taxes, so just careful. Financial Investor says, Merrill Edge still the best traditional platform? Ooh, I would debate that one with you. I think Thinkorswim kills it. In terms of everything, right? Having the education, having the platform, all the features and functions, custom programmability if you like doing that sort of thing, every market, every sort of asset, every product you can trade. I think that one might beat it. But it all depends. I mean, if you're a day trader and you like programming your own algorithms, then nobody's going to like either one that we just mentioned there. No, we don't use futures or options with most client accounts. We do a lot of, no, we don't. For some of our clients that are retired and they want that extra income or want that income-based approach, we do use options for them, but it is not by any means something we do by default. Nope. It's got to fit you. What do you use to track analyst performance? It's on our platform there. We work with Interactive Brokers as well, although I don't like them. Their platform has it all built in. Again, because they charge, right? There's no way that platform would be built if they didn't make money off trades. So it hurts my heart a little bit. Chance of meaningful progress on a China trade meeting. Surprisingly, people are mostly optimistic. If you look at the options market, the implied volatility, and then you look at the sort of expectations of a move outside the 3 to 5% area, there's actually a lot of people placing bets that the market will move outside of that range in the next month, which is really the only way to track that and come up with stats at the moment. So we'll see. Just a guess for me. I don't know. Oh, here we go. That's a question. What do you think about Restoration Hardware? So you got, let me go over here. Let me see if I can answer this somewhat quickly. So we got someone here who's got Restoration Hardware. They want to, I'm guessing, buy a 177.50 call. That's going to expire next week. You got to be quick on that, right? You got to be real quick on that. I see what happened today. You're excited by that, and you're hoping to catch the momentum trade there. I would be quick to take a very, very quick profit on that if it happens for you. Yeah. I don't like buying out of the money calls. Why? Why do it, right? You now have less odds of success than if you just bought the stock. And I get it, the stock is expensive, but buy the at the money call, right? Or, you know, whatever's closest to it. Going out of the money like that just lowers your odds by a little bit. Portfolio video. Oh, cool. Yeah, all right. Something we can focus on. Why doesn't it make sense for free trading? I remember $20 fees in 11, then 6. We had trended platforms, 1,000 pip. Well, that's my argument. Unemployable's got a better point there. Yeah. I hope it is not going to hurt the platforms there. Yeah. Fractional shares, very helpful. Yeah. If you need the fractional shares, you have smaller accounts, you're just getting started. Yeah. I don't know why Robinhood doesn't do that. Would think they have the capabilities at some point. We do fractional shares here, but it's like, you know, in the retirement accounts and things like that. Very helpful. From a long-term investing standpoint, does it make sense to sell investments from a taxable account to move money into it? Oh, it's individual. That's a tough one, right? There's no good general answer there, because I don't know if you have a taxable gain that puts you into some, you know, ultimate top, like the 34% tax bracket or whatever. So that's not one I could answer generally and not get in trouble or not really help. You know what I mean? If you just have a small gain, then go for it. Yeah, if it's like, you know, $100 or something, then big deal. But as you start having a larger and larger taxable gain, it becomes important that you figure it out for you and your income and what that's going to be. Is it long-term capital gains, short-term capital gains? How does that affect your taxes for the year? That would be important. Yep. So can you have access to the analyst info in the dojo? No, it's not in the dojo. Our videos are in there, and I do a lot of videos on things like that, but it's not technically like where you could click and do it. No. REITs, any short-term growth in them? I mean, it's definitely an overvalued, overpriced area, so that's a tough one. I would have a hard time diving in now expecting significant growth from here, but that's your call. All right, I think I wrapped it up there. We did a good job for the day. Look at patting myself on the back. That's what we do. All right. Hey, have a great rest of your day. Thanks for watching. If you know all the stuff, subscribe, like button if you like. You can do thumbs down if you don't like the video, whatever you got to do. And just engage with us, lets us know there. I mentioned a few things about things I'd be interested in doing videos on or helping with. If you feel strongly about it, leave a comment or react in some way, and we'll be happy to sort of take a look at that. Have a great rest of your day. Back to work for me. Enjoy, and talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.